Hi, today is Saturday the 11th, and this is the SPX Outlook for the coming week, probably the last week before trading volumes slow down, not to say possibly dry out, as always during the festive season. So this is the 4-hour chart, and generally I start with this time frame, which generally gives us a picture for about 2 days. And as you can see here, I have the lines. We see the red line here that goes all the way to 37.50. And as you can see here, we've got a pivot on 35.93, let's say 3600. So because of the huge run up that we've had after the elections until early December, this time frame is not really the most accurate unless we, let's say here we go for 3, which is 128 bars. We'd go for a narrower. Okay, it uses 64 bars. I mean, you can use the number of bars back you want to look. I mean, this is okay. What I want to say is that when lines do not provide you with any significant information, I tend to revert back to fibs. And here we've got fibs with the second fib, the lowest fib support here on 36.40. And we see that even though we had some penetration, market bounced, and so overall this support level held. But even though this is not the time frame that I would choose for this type of outlook, let's have a look now at the 30 minutes. If you look here at the 30 minutes, it looks like some time frames will give you better information than others. And here we see that this was pivot. Pivot is actually a strong support or resistance. Return resistance, which indicated that the market would probably go down because it is stronger than the yellow line, and it went down. It found support on the blue line, which is very strong support. Here again, and then support broke. Market hovered, still testing pivots. That's quite normal. It hovered there. It never passed the pivot level, which in the end was rejected, and market aimed straight at the next support level. Tested again for support and up. So what I'm saying is that sometimes you will have more salient, more significant information on the different time frame. So having said that, let's go back to the 4-hour chart. So on this 4-hour chart, as I just said, the market seems to have bounced off the strong support. Incidentally, the blue line on 30-minute chart was right here. And now it is going up, and it closed at 36.60, so just about here. And we are in a fairly steady downturn. To me, the market should keep drifting down. But no, I mean, we can have the 36.70, which was the former pivot on another time frame, as a test level to maybe give buyers, bulls, more stamina to go further up. So as long as 36.70 is not passed, the market could just hover in a trading range, resume its course downward. So I would say on this time frame, I would say in the base case scenario, trading range, testing 36.70, and if it doesn't pass it again, it will go down again. So that's it for this time frame. If we look at the longer time frame, where obviously there's still a lot of bullishness, we see that the market has peaked. It has peaked above the stall level. So it's almost a surprise the market did crank up to 37.50. So abandoning that level, showing that bulls are giving up. And they think they've made enough money and it's time to take profit. Look at this amazing bull run since the election, early November. So if we were to, let's delete this one, which is a shorter time frame, and now let's try and see where it could retrace to. I'm going to take this low, this high, and here we have a first level on 36, on 35.30, then 34.75, and 34.20. 34.20 is actually an important one. And if I was to look on the 4-hour chart, we would see the 34.70, the 34.20. As you can see, this is the strong support area, even here on this time frame with the blue line in the same area. So I would say that if the market doesn't pass it 36.70, it will try and go for 3600 and maybe lower, considering that on this long bull run from November, the fib supports are actually lower. So I would say bearish congestion, or just congestion, which is unusual. Generally, we look at a Christmas rally, but we have seen lately some sector rotation. The Russell has been on fire for a long time now, and it will definitely take profit sometime at some point. I would first assume that the correction would happen in January. Who knows if it cannot start a little earlier. So back to the 1 day. Of course, the bullish resilience is on 3600. I mean, you see this green line here. So this is where the I would say the most aggressive bulls would go back to fill the dip. So far, we don't see the dip being filled. So again, bearish congestion is my favorite scenario. So lastly, let's have a look at the 1 hour chart. Here, similar to what I showed earlier on the 30 minutes. Actually, we see that here we have market that's really bounced off, pivot on 3670, went up to the next level, which turned strong resistance. This grayish line here is a third level. This is generally not the strongest resistance or support. So if it stopped there, it really shows that the bullish momentum had really faded out. So it then found support on the pivot level, then was again rejected. We see this. So I would say that this is similar to what I said before. If 3670 is not passed, and then bulls would be happier, more comfortable with this trading range, 3670 to 6710. Otherwise, I mean, this key level will be, if it's tested and rejected again, then we will definitely go to 3630 and probably lower to 6600, which to me is a stronger support level. And as you can see from this green line, same pattern as on higher time frame. This is a bullish resonance level on the longer time frame. Okay, that is it for now. Next video will be on current trades, and I thank you for watching, and bye for now.